All right. Good afternoon, everybody. Thank you guys for joining us today. This is going to be on disability insurance for individuals and families. And then down the road, we'll do a follow up on some group coverage when it comes to disability. My name is John Oliver. I am with ARC Benefit Solutions as an insurance agent. And one of the topics we just did previously was on life insurance. This one is going to be more disability insurance. And then we're hoping to do kind of a webinar series with some different topics, maybe once a month to try to help you guys out. But I truly want to just say thank you for coming out today and being in attendance. I know you have probably multiple things you could be doing, so we truly appreciate you sharing your time with us today. We have a special guest with us. His name is Jeff Mohr. He is with Diversified Brokerage Services as an owner, and Jeff was kind enough to take his time today to be with us. We have partnered here at ARC with Diversified Brokerage Services as a general agent, and he's just done a great job and has a great story. So would love to introduce Jeff to you guys today because he'll be sharing some good stories, some good stats from all of his experience through the years. So Jeff, if you wouldn't mind, share with our audience right now, if that's okay, just a little bit of your background and how you got started in this industry, if you don't mind.
Okay. Thanks, John. It's a pleasure to be here. I run Diversified Brokerage Specialists. We get confused with services a lot, but it's Diversified Brokerage Specialists. We've been around since 1946. My grandfather started the agency. And I will say that one of our passions for insurance, I think, started way back in the early days of when my grandfather lost his father. He was in 8th grade and had to quit his job and support the family. He was one of the oldest siblings and had to help his mom pay the bills and raise the family. So he never finished formal high school, but he got a job and did a lot of learning on his own and was at W.E. Lord as the manager of health insurance when he left and founded W.R. Dignan. And it wasn't long after that that another agency leader, Carl Schlotman Sr., left and started what is now CAI. Lou Crawford left after that and started Crawford Agency in Northern Kentucky. So a long line of professionals in the business. And my grandfather was a leader there and was the first to start a individual disability brokerage operation. That's what we're going to talk about today is individual disability insurance for individuals and families. And John mentioned in the future we may do another session on individual disability as it relates to businesses and business owners and key people, which is different than group. We may do something on group as well. But it's all about individual coverage. The beauty of individual coverage is people own it. It's yours. It's portable. It goes with you wherever you go. So there's a big difference between individual coverage and group. But we've got a long storied history, 78 years, and this is my 40th year in the business as a disability insurance specialist.
Unbelievable. Great story, Jeff. Thank you so much for sharing that. I met you a couple years back. It was funny when I left a company and prior to coming to ARC, I ran into an agent friend of mine who's an independent agent out there. And I was asking, where can I place some business when I write it? And immediately he said, you have to call Diversified in Kentwood. He said, go see Jeff Mohr, see his son, Sean. And it was like, oh my gosh. So that was a couple years ago. And Here we sit today.
Yes, that's right.
Pretty cool starting to form that friendship that I love. And hopefully we have some cases we can put together.
Mm-hmm.
But I really appreciate all your time. So we're lucky to have you today.
We appreciate you too. You're doing a great job.
Thank you. All right. So today, as we have said, this is how to protect your income and your financial future, right? So, growing up, everybody always had said, your home's going to be your largest asset. In some respects, it could be for some folks, right? But we kind of have a different twist here a little bit, right? There's no doubt we're throwing a ton of money at our homes, right? You put a 30-year mortgage or whatever you do, between the interest, the utilities, the taxes, what it takes to keep that home going. You've put a ton of your money into that, one of your largest assets. But today, we're actually going to show you really what your largest asset is. So prior to getting to that, we're just going to kind of talk about this financial pyramid, right? And setting yourself up for success and making sure we have a rock solid foundation, right? So obviously, you guys all have your auto insurance. You've got your home. Most people are carrying life insurance for the most part. Here we do health insurance. Obviously, we believe greatly in that, right? You're putting money in your 401k or whatever investments you may have. And ultimately, the goal is to pass that on, right? To make sure the next generation is set up for success, they're taken care of. I can tell you, my wife and I, our whole goal is to make sure our 3 kids are well taken care of, have a good start. My parents had done it for us, and we believe, we got to pay this forward, and we're trying to do our best. But none of this matters, and I'm going to be really honest, and it was an eye-opener for me, even though I've been around this a little bit. It was disability insurance, right? And making sure that that's your concrete foundation. Because one of your largest if it is your largest asset, is your income, your ability to earn income. If that's taken away, none of this really matters at the end of the day, right? I can't afford premiums to pay for my car. I probably can't afford my car. It's gone, right? Life insurance, as much as I'd love to continue paying those premiums, those are typically the first to go. And health insurance, we all need it. But let's be honest, there's people out there walking around with no health insurance, right? Property and casualty, who knows you're going to be able to keep your home. If something happens and you don't have income to support all of this dream picture, right? So it's kind of that rock solid, and where it all starts, where that concrete foundation begins, is with disability income. And why, Jeff, I don't want to speak for you, but I think is why you're so passionate about this topic. Would that be fair to say?
Absolutely. Disabilities, clearly right there. It's the foundation of a financial plan. I remember a couple bits of advice my dad gave me was that, no matter what you earn, you got to remember you have to live on about 75% of what you're making, because there's expenses, there's bills, there's things you have to pay out of your income, and disability insurance is one of those. And generally, disability is only going to cost you 2% of your income, just 2%. So if you're making $100,000, disability should cost you about $2,000 a year.
Yeah, great point. Yep, you're exactly right. I know we always think it's going to be so much more, and for some reason, sometimes this topic just doesn't get mentioned, me included on this. All right. So as you guys know, we've just talked about this. You're going to insure your car, right? By law, in order to be driving legal out in the state of Ohio, you have to have insurance, right? And we do it. Now, at the bottom of the screen, some of these numbers have obviously adjusted. It's more the content of what we bring here, but most people on average probably have a car that's running at least $30,000, $40,000, maybe $50,000 right now out there. Average price of a home anywhere from $200,000 to $250,000, depending on some of your areas, right? And we do insurance for those, right? We want to make sure those are protected. But look at what's in that right column there, your income. So this example is a 35-year-old. We're assuming a 4% increase per year. That might be a little bit high, right? And that's okay. And on that, but his or her ability has the opportunity to make, on a $75,000 income, will amass $4.2 million in income. That is why that has become your largest asset, right? And why we're here today talking about it, and the importance of it, and why Diversified Brokerage is in the business, right? Assisting those agents out there and placing these cases, right? Because you give them that platform to be able to place that business, right?
Absolutely. It's so important. I think a comment that I would make on this slide is, if you lose your car, as long as you're able to work, you're going to have another car. Your house could even burn down without insurance. And as long as you're able to work, you'll have another home one day. But if you lose your income, you're going to lose your house, your car, you're going to lose everything.
Yeah, yeah. And we'll talk about this here just shortly. Some people may say, oh, I've got a spouse or I've got someone that's going to help me. Maybe. And that's something we'll chat about here just shortly.
Yeah. That's assuming your spouse stays with you.
There you go. Absolutely. In this environment where, 55 to 60% of marriages are failing, you've got a lot of single income earners out there. There may not be that help, right?
Well, if someone's disabled, it's more like 85%.
There you go. Absolutely.
Right. Don't make it.
Yeah, and it's so unfortunate because when you need these people the most, right, and you can't work and you're relying on someone, but the pressure to keep that going and the amount of money that's being spent for their care, it's extraordinary, and why sometimes people just can't do it, right? But here's another great slide, right? And we'll take the 40-year-old on this particular slide. And let's just assume at $100,000, okay? So at age 65 with a 5% increase, they'll amass $4.7 million, which is great. Now, you guys may say, John, my gosh, we're only seeing really 2 to 3% a year in increases. Trust me, that's all I used to get to in former jobs. So even if we didn't get an increase and we just stayed at the 75,000 mark or 100,000 mark, over a 25-year period, you're still amassing $2.5 million, right?
Even without inflation.
Even without the increases here to combat inflation, right? So think about that. That's still going to be your largest asset moving forward, and why we're here today talking about the importance of an individual disability policy.
Yeah, and this is something that the normal person doesn't even think about. They don't realize that. It's up to us as agents to point that out to them.
Yeah.
They really don't do that math and think about it, but that's their greatest asset by far, their ability to work and the income it'll derive.
Yeah, and I agree. And as you guys know,
visual.
Yeah, it really is. And guys, I haven't been around disability. So for this, as we were putting this together and talking it through, was really an eye-opener. I mean, common sense, you're going to amass some money over time, but to really look at it and then, visualize like, wow, you really start to think, oh my goodness, I may have it with my job, and we'll talk about this in just a little bit.
Mm-hmm.
But again, that may not be enough. You know what I mean? There could be gaps and shortfalls there, but just in this, right,
mm-hmm.
it's like, wow, so it really makes you think, I've got to get something in place.
I have a fellow in town, I won't mention names, but he actually ended up as a VP for a disability company.
Oh, wow.
And he became disabled. And he said if it weren't for all those individual policies he bought over his career, if he had to rely on his group only, he'd have never made it. He'd have lost his house and his car and that.
Yeah.
But it was those individual policies that he had paying him on top of the group through his employer that allowed him to really maintain his lifestyle.
Wow, that is awesome. That's a great great story, and I appreciate you sharing that, because it really is. I mean, today we're fine. We just don't know what tomorrow may bring, right?
Absolutely.
And it's always out of sight, out of mind on this stuff, and you just always think you're invincible. And
Steve Palermo thought he was invincible.
Absolutely.
Right.
Yeah. And Steve, Jeff, if you want, do you want to, since we're on the Steve Palermo, do you want to touch on that now, which I think would be great timing for this?
Yeah, Steve, and I know you might have had some things.
That's okay. You're fine. Don't you worry about it.
Steve Palermo was a American League umpire. He umpired in the World Series in the 80s.
Yeah. And
just a really great guy. He spoke at one of our Disability DI Day events. We've always had a lot of training and presentations like this, but we've started bringing in people that suffered a disability to really talk about what it's like and what they went through. And a lot of them, have common stories, and I'll explain that in a moment. But Steve Palermo was an umpire traveling with the umpires like they do from city to city. And they were in a particular city, I forget which, it might have been Chicago or somewhere, and they're all out to eat like they always do. They had their favorite restaurants. I'm talking about just the umpires. And they were closing down this restaurant, and the waitresses were leaving and turning out the lights and getting ready to go, and they knew everybody in there because they are there a couple of times a year. And sure enough, one of the waitresses in the parking lot starts, being accosted by a group of hoodlums, so to speak. And so they run out there, all the umpires run out there to save her. And most of them attended to her and kind of ran the assailants off. Well, Steve Palermo chased down one of the assailants and tackled him near the entrance to the parking lot. And so he's holding this guy down, waiting for the police. And lo and behold, the other assailants got in their car, drove around the block, and started shooting at Palermo. And he took a bullet to the spine, and 1 minute he's perfectly healthy, saving the damsel in distress. And now he gets a bullet through the spine. And disabled from there, could not walk, totally disabled. And of course, the surgeons in that, they're telling him he'll never walk again. And he started off in a wheelchair. And through determination, and that's where he really talks about his disability coverage. And this is the common thing that so many disabled people say, is that if it weren't for my disability policy, if I had to worry about making money, if I had to worry about feeding my family, paying the bills, he would have never recovered. But he had good disability insurance, good individual DI. I think he had some group as well. And that helped him get through that period of financial distress. And he collected for a very long time, but it enabled him to focus on rehab and doing what he had to do to get back to work. So that's the one thing many disabled people say, is that if it weren't for those disability benefits, I'd have never recovered.
I believe it, Jeff. I just can't imagine. Here you are suffering, right? You've lost what you know of your life that you're so accustomed to, right? And then the last thing you want to worry about, because those bills don't stop, right? The Duke, the car payments, the house payments, real estate taxes. You just can't call them and say, hey, I had an incident. It's going to be a little while, right? They just keep coming. And that's the last thing you want to worry about, is you're trying to convalesce and get back on your feet if you can. And
well, let's not forget that if you're disabled, you get fired. And when you get fired, you lose your health insurance. Yeah. And when you lose your health insurance, probably the only other option, especially if you're disabled, is going to be COBRA. So I'm no expert on health insurance, but I think that's about $2,500 a month for a family. So you need to factor that in to what their needs will be when they're disabled.
Sure. Great point. Excellent point on that, Jeff. Thank you. Appreciate you sharing that story. Mm-hmm. Yeah. So again, just to kind of reiterate, how would you replace your lost income? And this is a good slide here, right?
Beg, borrow, or steal.
There you go. That's right. It's great to think you've got some savings put aside, right? And most people may, right? But as we'll see on another slide, that may not be the case. Mm-hmm. And as you know, if a disability lasts of any length of time, you're probably going to wipe that savings out, right? Social Security, it's not much of a benefit, right? And even trying to qualify for Social Security benefits, you get denied typically. I know that firsthand through one of my best friends. His wife had a stroke and what they went through. Thank God he had a friend who was a disability attorney that was able to help, thank goodness, right? Other income, right? So you start to drain your 401ks, you start, grabbing Ross, whatever it is out there, just to stay afloat. You may have to do a home equity loan, whatever it is, right? And then the borrow, right? The GoFundMe's out there. I just got an email from a friend of mine. Obviously, like Jeff said, we're not going to share names, but, he had an unfortunate incident about a month and a half ago, and they were asking for some assistance, right, with the health costs, because they're astronomical when things come. And so not to belabor, not to continue to harp on it, but you see the importance of an individual policy.
Well, when you think of it too, if you're disabled, you are depleting savings, you are depleting your retirement plan, you're not making contributions. So what people don't realize, no one can really picture themselves being disabled for the rest of my life or to Social Security retirement age. But even a 2-year disability, just think of the impact. I mean, you just went through your savings, you depleted part of your retirement, you don't have your emergency account anymore, maybe you took out a home equity loan. Well, how long is it going to take to replenish all that?
Exactly.
Probably another 4 years.
At least.
So a 2-year disability has a 6-year impact on your financial plan.
Right.
If you ever get your retirement savings back on track.
Well, that as well as, are you marketable out in the workforce, depending on what you had?
Mm-hmm.
That's the other thing.
Right.
So you're correct, grandiose, it could be a 6-year impact. It could be a whole lot more, right?
Well, and a lot of illnesses too, you may have had a reduced income or reduced earning power for a while because you weren't feeling well, you didn't go on disability.
Yeah.
It could linger before, linger after.
Yeah.
Some disabilities can happen just like that, as I mentioned with what happened with Mr. Palermo,
Yeah.
or any car accident. Certain things just come out of nowhere.
Absolutely.
And those can be the worst, but the
Yeah.
suffering that comes with illnesses, and illnesses, probably 8 out of 10 claims are illnesses.
Yeah, absolutely.
Mm-hmm.
Yeah, thank you. All right. Interesting slide here. One kind of hit home to me because of my age bracket where I sit. The chances of a disability may be greater than you think, right? And again, this is not a scare tactic, but unfortunately, there are statistics out there. So we know that there are folks, unfortunately, that are part of this grid, right? They have gone through this. You just heard the story on Steve Palermo. We've got another story we'll share that actually ended up so much better. But, and I'm sure you guys know of folks that have been through some of this. So the stats don't really lie, right? Unfortunately. But just as we look at this slide, for a disability to last, if you're on disability and it's going to last more than a year. So take my
Mm-hmm.
age bracket where I sit. So I'm going to be in that far right column. I can't hide from that one. So at age 55, for a disability to last for one more year, there's an 81% likelihood that I'll be on a disability longer than 1 year, possibly could be 2, right?
Yeah.
73% chance that it could go on for 2 or more years, right?
Yes.
God forbid 5 years, right? Thank God I'm getting close to Social Security, but I don't know, I don't mean to laugh, but, there's a 62% likelihood that this thing could last for much longer. I mean, probably the rest of my life as I age into Medicare, obviously, and Social Security. So, yeah, pretty powerful story.
Disabilities have, like I said, a lingering effect. You're just able to, a year or two, it's going to be lingering effect. 5-year disabilities are not uncommon. You just never know. I look at these statistics and I kind of look at it as in a different way.
Yeah.
It really doesn't matter to me whether the odds are 7 out of 10 or 1 out of 10 that you'll be disabled. The problem is if you're the one.
That's
if you're the one,
oh my gosh,
that becomes disabled, the consequences, the financial and emotional
right.
consequences are so devastating. You have to have a plan. There's no choice. You have to have a plan. And the best plan is, protecting yourself with an individual disability policy. Now, if you have some means and you feel you would have other income, then, maybe you don't need to go the full 60%
Sure.
by 30%, or maybe a 5-year benefit period instead of age 67. We have a lot of techniques to make disability affordable.
Yeah.
But to go without, to have nothing is, not a good plan. It's not a plan at all. It's not a good idea.
Sure.
And for agents out there talking about DI, it's such a better door opener. You'll get the life insurance if you bring up DI. Leading with life insurance, there's nothing wrong with that, but you'll find everyone's talking about life insurance. But disability, any number of people, I don't know about life insurance. I think I've got plenty. Well, what about disability? Oh my God, no one ever brought that up to me. I never thought about that.
Sure.
So disability is huge. It can be affordable. I know we'll get into Job A, Job B in a minute, which is a great sales technique.
Yeah.
So I really encourage agents. That's why we got into life insurance, is because of, disability sales led us there. You write DI, hey, what can you do with life insurance?
Make sure to pair it together.
They do. They do the same thing. They replace income.
Yeah. Jeff, if you don't mind, if we could take just a step back for our audience, if that's okay, and just explain long-term disability. So we've got folks here at work that are on the call. We've got obvious clients out there in there. Can you explain long-term disability, kind of the percentage that someone may get off their group policy if they have one, and why, if there is a group policy and someone says, oh, I'm covered, what about the additional individual policy?
Yes, well, I think there's a slide
There is.
with respect to that.
Yes, and we'll get to that.
Okay.
Yeah.
But yes, your coverage through work has limitations. One of the first things it has is generally a limit on your own occupation.
Okay.
So there was a special on the news, talking about people getting kicked off claim and that, and of course 60 Minutes or whatever turned out there's an insurance company scam or something's going on. You know what it is? All it was, I mean, I saw it right off the bat. It's people reaching the end of their 2-year own-off period on their group coverage.
Got it.
And then they're told, hey, the definition changes to the inability to do any job you're reasonably qualified for, so they no longer collect. A group LTD plan, many times, even though it says to age 65, it's a 2-year benefit period because that's your own-off period. It's 24 months.
Okay.
After that, it's any occupation. So that's number one to look out for. The other thing is group benefits are going to be taxable. So you think you have 60%, but it's taxable, so it's more like 40%.
Okay.
Could anyone live off of a 60% pay cut? Ask people that.
No.
Because that's what they've got if
No.
they've got group. And then if they're getting bonuses or pension contributions or commissions, those generally aren't covered by group also. It just covers base salary.
Great point.
So those are the people that really understand the need for additional disability on top of the group.
Thank you.
It's so important to do. And that individual will be tax-free because of paying it themselves. So when we're layering group and individual together, sometimes we'll exceed 60%, even up to 70%.
Good.
Because we know part of that is taxable, the group, but the individual will be tax-free. The individual is portable. If you leave that employer, you lose your group. It's gone.
Right.
The individual stays with you wherever you go, and the premium doesn't change. The premium stays the same.
That's awesome.
You've got residual, you've got own-off, you've got full mental nervous protection in certain cases.
Yes,
and
sir.
that's another thing with group, they generally limit mental nervous claims to 24 months.
Okay, perfect. Thank you. No, I just thought that was really important to kind of put out there because I know I had questions on how much they're going to get, and the taxable situation's huge, right? You're not only getting trimmed to 60, you throw the taxes, now you're down to around 42% or 40, and very tough to make it, you know? Right. Absolutely. Okay. So this screen, right? So disability plays no favorites. There's no discrimination here, which is amazing. So couple things I wanted to highlight. As you can see on this wheel, it's not a wheel of fortune, it's a wheel of disfortune, right?
Look at backs and mental nervous. It's about half the claims.
Yes, you're exactly right. So when you look at this, right, and I just kind of Googled some stuff, for the nervous system, right? You're thinking of MS, maybe a stroke, ALS, right? All these common things that you hear about with folks. Circulatory, hypertension, my God, it's running rampant, right? Angina, so that would fall in that category. So when you're thinking about disability, right, I always think of injuries. I think of just different things of that nature. But look at cancer. I really thought cancer would be higher. Cancer's at an epidemic level, right? But what really stands out...
Well, those statistics, go back several years.
Sure. No, and I agree. So that's definitely probably higher. Right. But, look at the muscle...
2011.
Yeah, and connective tissue. So in that respect, you've got lupus, rheumatoid arthritis, you've got autoimmune disorders, right? All of this common stuff, especially... We hear about it daily on what folks are fighting with all their medications that we're given. It's incredible. And then 16% mental and nervous and substance abuse, right? Anxiety,
if anything,
and depression.
Mental nervous has increased.
Yes, that's definitely.
And some of the other areas. And I think that the thing everyone can understand is today with medical technology, like hypertension or a number of things that used to kill people, they don't kill people anymore, but they... are disabled from it. They remain disabled from it.
That's right.
And I think the biggest thing is you look around at all the hospital, all the medical facilities, all the rehab facilities. You know, and the nursing homes as well. It's not all older people in there.
Thank
I
you.
have some stories that I know of
Oh my gosh.
of young kids that are in these facilities
Oh,
because of an accident, injury, brain injury,
yes.
you know,
You name it.
drug situations,
It is.
whatever it might be.
Yes.
It's sad.
It really is.
So disabilities are out there. These hospitals, my point is, they're not empty. They're there for a reason.
No, they're popping up everywhere.
Yes.
Right? And not to laugh, but honestly, I just spoke to a home health aide just recently. It was last week, as a matter of fact. And I asked her, I said, you know, in your facility, who are you seeing? And she said, you'd be amazed. She said, John, it is younger and younger now. She said, our youngest patient right now, this is how sad it is 25 years old, right?
Yeah.
Now, these facilities are taking them on because they get paid, you know, from the state, so they need those beds filled. They need the money to keep these things going, right? But it's so sad. She said, we're seeing more and more younger folks. A lot of it's alcohol and substance abuse. It's terrible. And so, yeah, it's incredible what we're seeing, but you're exactly right.
Yeah, this is a good time maybe to tell that other story. We were writing a medical resident, and medical residents, last night I was at a meeting at the Academy of Medicine talking to residents about disability insurance. We offer discounts to doctors, dentists, attorneys, professionals are big buyers of disability insurance, of course. And I think doctors are because they see so many people, you know, that are disabled. They know it can happen. They know it can happen to them.
That's right.
They put a lot of money into their degrees.
Yes.
So if you're out there wanting to sell more DI, you know, certainly business owners, and we're going to talk about that in another session, people with college degrees, certainly doctors, dentists, attorneys, anyone making over 100,000. These are your best disability prospects.
Yeah.
And this lady was a resident, and we have automatic issue limits for residents. We can go about 7,000 a day before they even get their first job. Back then, the limit was 4,000, but we had lifetime benefits. Okay. And this lady was smart enough to buy her 4,000 a month with lifetime benefits. And before she even got out of residency and got her first job, her eyes started having problems. And lo and behold, she ended up blind.
Oh my gosh.
And so she collected 4,000 for life. She's still collecting. I think after about 20 years, I contacted her to speak at one of our events, though she was working out of state, had a job, had moved out of state, but was so grateful for her disability. She was still collecting, but she was a business consultant.
Yes.
And was able to rehabilitate into another job and made a good income. Good. But because of the ONOC and the way we sell disability, she was able to still collect in addition to her new job and her income. Amazing. And she told me, you know, straight up that if it weren't for that disability policy, she'd have never been able to launch that second career and have that job. Once again, if she had to worry about her rent payments.
That's exactly right.
You know, making some money, all of that.
Sure.
She'd have never.
No, Jeff, you're exactly right.
Been where she was.
You know, and
very happy with a good income.
That's exactly right. And what I think about that too is, here she was able to have purpose in life, right? Not only was she able to overcome what she did, she's out consulting, and that extra money coming in every month, giving her that peace of mind, and to continue just being able to feel viable in this world. Is so important, because once you get hit with a disability, your confidence, right, and how you feel, the self-esteem, all of that. I think about all of those as well, and so any way we can do to help them just rebuild and make sure that money's the last thing they have to worry about.
Yeah, going back to that last slide, that's that foundation. That's what we. That's right. Provided those people foundation that they were able to think of the other things higher up on that
pyramid,
financial pyramid.
That's exactly right. Great point. All right. Here's a really good slide. A couple of these, I know it can look a little busy. I apologize if it does on your screen, but there's a few I just kind of point out. The first one is going to be that consultant as you go down. The policy was issued. Now, keep in mind, this was a PowerPoint that was put together. Principal was kind enough to allow us to use this, which is great. I know some of this could be dated. I wasn't really concerned with that. I was just more concerned with the content and just thinking about different disabilities and what the amount of money has been paid in claims. That's what's really stood out to me. So here was a 47-year-old, and at 50 gets hit with a disability. It was a neurological condition, and they paid out almost $500,000. Think about that, right?
Yeah, it was probably an ongoing claim, so
Yeah.
it was 500 at the time they,
Right.
did this.
Yeah, who knows what it could be today, right?
Right.
A dentist, right? At 41 years old, takes out a policy, and it's 16 years later, so they paid a lot of premium into this policy, and at 57 has a neck injury, right? But think about what they paid in claim, to almost $270,000, right?
Mm-hmm.
Which is amazing. How thankful, how smart, to put it as part of what Jeff just said, as their financial foundation, to make sure that they're going to be able to continue being able to survive, be able to live,
Yeah.
get through this disability, overcome, and not have to worry and know that there's an insurance company out there that is paying this month after month
Mm-hmm.
to keep them going. Staggering.
I have a couple anecdotal stories. I know a
Sure.
dentist and at that resident meeting last night, it came up about a doctor. My dentist story and this doctor's story was the same thing. They both dropped their disability because they were thinking about retiring.
Okay.
They're getting close to retirement,
Mhm.
and they're thinking, cutting expenses, cutting bills. Don't drop your DI. Do not drop your DI before you retire. That's what happened in these two cases, and they both got disabled, and they did not have those benefits.
Wow.
And the
Wow.
doctor, the dentist I dealt with, that was sold through our office, I think he had some individual he kept, but he dropped his big overhead policy.
Oh, got it.
And,
got it.
that just clobbered him.
Sure.
And he was one of those people that unfortunately ignored symptoms, was home, was sick. I'm going to be better. I'm fine. Take some
Sure.
Tylenol, whatever. And next thing, it ends up sepsis.
Right.
And he was in the hospital.
Oh, it's awful.
I mean,
Yep.
it was terrible. I visited him in the hospital.
Oh my gosh.
And it was just so sad how hard that was on his body. He almost died.
Yes.
It's one of those things
Absolutely.
where, so
Absolutely.
you have to be very careful. You have to keep it. Things can happen at the worst possible times.
You're exactly right, because you had talked about that a policy can go to 65 and in some cases maybe 67, right?
Yes. Yep.
And-
Even to
and-
70 today.
And even
It
to
goes to
70.
your Social Security retirement age.
Which is awesome, right? So
Right.
for me, born after 1960 is, we're going to be at 70, right?
Mm-hmm. Yes.
So, and then just a couple others here, and we'll move on. But take a realtor, right? They're an independent contractor out there, right? And here's an example: a 43-year-old, which is great, right? In the prime of her earnings, right, for the most part,
Mhm.
and then all of a sudden gets hit with a disability at 47, Hodgkin's disease, right, cancer, right? I mean, it's running rampant. Hodgkin's was in my family, trust me. It's awful. And, here's a claim for $128,000, which is amazing. So to have the foresight to say, you know what, I may make good money as a realtor, right? But I got to protect myself. I don't have health benefits. I don't have those things.
Let's look at that one again.
Yeah.
Okay.
Yeah.
So here's another point.
Sure.
If that realtor, if they had known he had Hodgkin's disease at 43, probably wouldn't have been issued. So all these things, before they become a claim, they become a pre-existing condition.
Yeah.
You have to buy disability before you have these pre-existing conditions,
Great.
or you'll be told no.
That's right.
So it's just not a matter of, a crystal ball, when am I going to be disabled? I need to buy DI. No, you need to buy DI now.
Yeah.
You buy disability insurance with your health.
Yeah.
The younger, the cheaper, the premium is guaranteed level for the rest of your life. So any of these conditions could have prevented someone from getting disabilidy.
Sure. That's a
And
really
so
good point.
you
You're
have to
right.
buy before you become a diabetic.
Yeah.
Before you've got one of these diseases, before you're told you got melanoma.
Right.
And that's really
Yes.
the sense of urgency
Yeah.
that you have to get across to your client. It's about buying at your current age, buying when you're young, and buying while you're healthy, and before you get put on a bunch of medications.
Yeah. Fantastic point. You're exactly right.
Right.
Yep. And then lastly, guys, just a veterinarian, right? 46 years old, again, prime of their earning, building that business and just growing, and all of a sudden at 50, right? Migraine set in, right? The stress, God only knows, right?
Mm-hmm.
And then you've got a claim that's almost $160,000.
Speaking of pills, I just,
Right.
just want to make sure I took mine.
Yeah. Oh my gosh, absolutely. So, yeah. So guys, this is a really, really good screen. Really hit home to me because, these are all people we know, right? We all know a dentist. We all know a realtor. We all know a veterinarian, right? We all know a business consultant of some sort or a consultant in something, right?
Mm-hmm.
An attorney, a doctor, an engineer, right? All of these, optometrist to a nurse, right?
I remember one like this because we've got updated forms like this and that, and I've looked
Yeah.
at these. I remember years back, McAfee's had one. A guy was disabled from a spider bite.
Wow.
Another guy fell off a horse. Of course,
Oh my gosh.
Superman was disabled by falling off a horse.
Yeah, that's true. You're right. Yep, you're right. Yeah, so you just never know. It's amazing.
Mm-hmm.
So, again, here at ARC, obviously we're doing health insurance, whether it's under 65 or the Medicare space at over 65. But obviously we believe in the health insurance, right, to cover those hospital bills, the doctors, the meds, right? Everybody's on some form of medication out there, right?
Well, disability is health insurance
It is.
that pays you.
That's right.
All that is good for the doctor, but it's not going to pay you.
That's right. Yeah. So in order to have that balanced plan, right, you always just think about, oh, I've got a health policy. I'm in good shape. I'm on my group plan, right? Well, to truly have that foundation that we've talked about, right, and to reiterate, you need a disability policy, right? And think about what that's covering. It's your food, your clothing, your housing, transportation, insurance, retirement, college education. Lord knows I'm aware of that one, right? Medical expense, good Lord. And then there's many others, right? But, having those two combined form that foundation and give you what we hope is a balanced picture.
Yes.
If something does happen, I've got some coverage, right?
Don't forget that COBRA premium, too.
Yeah, the dreaded
Right.
COBRA.
Yes.
Yeah, in many ways.
Medical expenses and the health insurance.
Yeah. Yeah, it's incredible. So, so that's a good little piece. So again, this is all about trying to figure out how to give you peace of mind at the end of the day, right? I know we have a lot going on in our world, right? Life just does not stop. It hits us from multiple angles. It's constantly coming at us. We're just bombarded with stuff, right? And it can be very, very overwhelming. I'll be the first to admit it can be overwhelming at times. And so, but when you've got things in place, it just kind of gives you the allowance to take a deep breath and say, okay, I'm okay. I can focus on what's working on me right now or what I'm dealing with, knowing that I've got my health insurance and I've got my disability insurance, right, as a complete health insurance package.
That's
Absolutely.
a good checklist.
Yeah, so this is a really good checklist here. And by having those, once you protect your income, allows you to be able to take care of all those other things and just to be able to relax, take a deep breath.
Yeah, so important. Peace of mind. That's the key.
I'm going to let you touch on this one.
Okay.
This one you've done in a seminar before, which I love. This is a little bit different, but it's the exact same piece, just looked at it in a different angle. But I'll let you touch on both of those if you don't mind, Jeff.
Yes, this is an old sales presentation. We've always called Job A, Job B. And it's very effective in talking to people. And I would say a couple things here. When you're working with an individual, this is really an important slide, and it really brings in perspective the need and how much disability really costs. So you're talking to someone about disability. Do you have income protection? Would you like, income protection? And, they have none. And you say, well, let me just ask you a question. If you had a choice of two jobs, tell me which one you'd take. The first job's like the one you have. You make $100,000, but if you get sick or hurt, you get nothing. Your family gets nothing. You're going to lose everything. Or there's another job that just pays 2% less, $98,000 a year. With this job, you're guaranteed that if you can't work due to accident or illness, you'll get 60% of your pay income tax free.
Wow.
That's $60,000.
That's huge.
All the way to Social Security retirement age.
Yeah.
That's job B. Now, which one would you take? And anyone with much common sense is going to tell you, I prefer job B.
Absolutely.
So the question is, if I can get a disability quote for $5,000 a month, and as long as the premium's less than $2,000 a year, you're saying you'd be willing to buy that or consider it? They're like, yes, yeah, that sounds great to me.
Yeah, right.
And so then you come to John or come to us, and that's what we will do, is show you that we can get a disability policy for $60,000 a year for less than $2,000 a year. Now, generally that's factual. Now, someone 55 or
right.
someone
right.
mild diabetic, it might be more challenging.
Sure.
But we've got techniques to do it. You know, maybe we got to go down to a 5-year benefit period. That generally cuts the premium in half.
Wow.
So there are great techniques that we know that we can work with you to do that.
Yeah.
And I would say too, like when you're working with a business owner, maybe he doesn't have disability, and first thing you know, he's going to tell you, oh, I'll just keep paying myself if I'm disabled. Well, you don't want to be in that situation. So you ask that business owner, you know, how business is going, how things are going. I bet the place runs itself.
Yeah.
You probably don't even need to be here. Did you take a month off last month? You know, and he's going to start telling you, what?
I know.
A month off?
You're crazy.
I haven't taken a week off in 5 years.
Right.
I have to be here every day.
Yeah.
And so then you go to, well, then if something happened to you, clearly you're going to have a loss of revenue. You should have disability coverage, either to, you know, help pay expenses, an overhead plan, or at least an individual policy. And, you know, so you laid the groundwork to define that need and make that sale. Because after that conversation, he can't come back and say, oh, well, you know, I don't need to be here. This place is just going to run itself and I'll pay myself.
Right.
So,
Doesn't happen.
yeah, don't get into that trap. Plant the seeds first about how he has to be there every day.
Sure. Sure. Yeah, absolutely.
Yes. So this is a great technique. Job A, job B.
Yep.
Remember, 2%, just 2% of your income can provide 60% after-tax income replacement.
That's huge.
And you'll have a lot of success with this.
That's great. Thank you.
That one's only been around since about 1940.
Is that it?
Yeah.
Okay.
My grandfather used that one.
Oh my gosh. Well, we appreciate it. He'll appreciate that. He would appreciate that as well.
Right.
That's awesome. All right. So again, just to kind of reiterate, right? Some of this has been redundant, but it's really just to kind of hit home, right? You know, 71% of America is living paycheck to paycheck, which is it's staggering, right? Now, I listened to Dave Ramsey last night, and that number now is up to 78% of American employees are living paycheck to paycheck. Now, that entails they're buying some things out there. It's just not, you know, some necessities. They're getting little extras out there, right? But it really tells you that if something did occur, I don't know if people could make it, right? I mean, that's what resonates with me, is that we're on just a crumbling foundation. Mm-hmm. And as expensive as things are, and the inflation numbers came out today, and of course it's hotter than fire at 3.5%, which it's much higher, but we'll leave it at 3.5% right now, Jeff. So things are expensive, right? And so your money's going, it's not going as far, right? And you don't have much to work with, you know, as you've got less to play with, and it's really hard.
Yeah.
When we think about personal bankruptcy, you know, back in 2007, it was 62%. Today, it's 66.5% of personal bankruptcy is due to medical expense. I mean, I've seen an explanation of benefits. I mean, what some of these places are charging are just, it's unbelievable, right? And hence is why, you know, you get into such medical debt, you can't help it. I mean, it's staggering what some of these costs are running to go see a doctor or be in the hospital for a day or two, and you walk out with an ungodly bill. and, you know, they're calling you to make payments, right? And yeah, it's crazy. And then this last part of this slide, which really hit me between the eyes. And Jeff, I don't know about you, but, you know, we'll be on this for, you know, another 10 minutes for a total of an hour, right? But these last 10 minutes, 500 people roughly will find out that they have some form of a disability. For this hour, it's now 3,000 people, right? So when Jeff talked earlier, it didn't really matter about the statistics. It's all about you. And if something happens to you, and that's what resonates with me, is like, I could easily be one of the 500, right? I could easily be one of the 3,000.
Yes.
We're a phone call away from bad news, and that's what's really scary, to make sure that my wife, my kids, you know, are taken care of. So,
and you know, life insurance, disability, people don't wake up in the morning and say, you know, today's the day I'm going to buy life insurance, or today's the day I'm going to buy DI. You have to bring this up to people. You have to show the problem and the need. And many of these slides help you do that. John can email this slide deck to anybody.
Sure.
It's the agent's job to bring this stuff up.
Yeah.
It really is, because they don't understand it. They're so busy. They're going through each day. Yeah. And I don't care whether it's a good economy, bad economy, people buy disability in all types of economies.
Sure.
And in tough times, that's one thing they always pay is their life and disability insurance. They will always pay that.
Yeah.
Persistency, renewals, your commissions.
Absolutely.
It's good, solid business.
Trust me.
A great way to build a living and a career. And with disability, you got the future purchase options. Yep. You're increasing the coverage as people's incomes go up.
Yep.
It's another great time to review life insurance.
Sure.
It's a sale that keeps on giving through all those increases.
Yeah.
It's like selling a new policy every time they increase it.
It's a good point. And something you just mentioned, you know, when COVID hit, I know it sounds crazy, but, you know, I went to the file cabinet, check on the policies and that. Trust me, it was like, oh my gosh, you know, at that time we were scared to death. Yeah, all the calls I was getting at work were making sure their beneficiaries were up to date, right? And how much coverage do they have? Is that policy active, right? Because it's always out of sight, out of mind. I mean, we're all busy. I mean, everybody's got a full plate. There's no one that doesn't really have a full plate on their table, right?
Right.
You forget about a lot of this stuff, but once you revisit it and you look at it, it really kind of hits home, right?
Yes.
It's incredible.
Absolutely.
Yeah. So, affordable protection. I'm just going to jump here. So Jeff and I kind of talked about this. We always kind of chuckle, right? Everybody talks about.
Everybody wants your cup of coffee.
Everybody wants that damn cup of coffee from you, right?
Climate change.
Exactly. Yeah, which is fantastic, right? So for a cup of coffee a day, you can have a $3,000 monthly paycheck because you had the foresight to buy a disability insurance policy, right?
Yeah.
The problem is you drive by any Starbucks, Dunkin' Donuts, right? They're packed to the gills. No one's grabbing that coffee.
It's probably the worst example because no one's going to give up their coffee.
No, they're not.
You know?
No, they'll give up a salami sandwich. They ain't touching their coffee, though, right?
That's for sure.
Yeah, so we need to change this down the road.
We're not telling you to give up your cup of coffee.
No.
We're saying it's the cost of a cup of coffee.
That's it. That's right. Yeah, that's right. Yeah. So, no, we just had to show this. This was funny.
Right.
So, and again, this is just to kind of bring all this together again.
Back to the employer situation.
That's exactly right. Yeah. So again, you're getting 60% thereof your benefit, right? And then you put, Uncle Sam in there. And
if you have group alone, can you live on 40% of your income? This is what you tell the person that says, I'm covered at work.
Yeah.
You talk to someone about individual DI, you talk to the importance of disability. Oh, I'm covered at work. Oh, okay.
Right.
Well, that's great. My response would be, okay, you've got half a plan.
Right.
We suggest you buy the other half because you've only got half.
That's right.
40% of your pay. Why don't we help you add a layer of individual, which is that brown block, and get your income replacement back up to where it should be, 68%, 70%.
Yeah.
And so this illustration is showing how the taxation of group disability reduces your benefit to the third bar, 42% of your pay.
Yeah.
and the importance of layering it with some individual on top.
Absolutely. Great point. Yeah.
And that would be O&O, that would be portable, that could have a longer,
Yeah.
a benefit period to 67.
That's exactly right.
Yes.
Yeah. So great impact here, right? Not only do you take that income up, but what Jeff had shared is, it's portable, right? That individual policy, which is incredible.
Yeah, premiums are guaranteed, they can never go
Premiums are
up.
guaranteed, right? And so now you've taken yourself almost to 70%, right? And so it's giving you that additional income to be able to survive the storm, right? And get yourself better. So,
And so one tip there, like we spoke at lunch, once you've done this, once you've got the individual in place, is when I would suggest doing so.
Yep.
If you really want to maximize your disability, you can report your group LTD as income, and that would make your group benefit tax-free. So let's just say for all disability policies, okay? It doesn't matter whether it's group or individual. If the employer is paying your premium, they're deducting it, and benefits are going to be taxable. But if you pay the premium yourself, or if you report and pay tax on that premium, then all benefits will be tax-free. So it's simply a question of, has tax been paid on the premium?
Yeah.
If the answer is yes, then your benefits will be income tax-free. And so the second block
that 37
would be what you would get if your group were tax-free.
Yeah. Great
instead
point.
of the third.
Great
So
point. Yep.
for people that understand this, they want to maximize their DI, those are steps we would suggest you take.
Yeah. Very good. Jeff, thank you. Very good highlight there.
Mm-hmm.
Yeah, we're getting close to the end, so I do apologize. I'll jump ahead just for a second. But here's a good one. We won't touch. I'll touch on it for a brief second. But
just
this is
adding up your expenses.
The slide deck you guys will have access to. But yeah, just adding up all your expenses, seeing where your income is, and then thinking about a DI policy, which is great. And then I'm going to skip this last slide here.
Yeah,
and
retirement planning.
Yeah.
We have plans that can replace your pension contributions.
Right.
Mm-hmm.
Yeah, absolutely. So I just wanted to come here real quick, guys. Again, my name is John Oliver, and I personally just want to say thank you for spending time with us today. We greatly appreciate it as well. And then I want to thank Jess in the background. She did a fabulous job. And I also want to say thanks to my partner who did a great job today, Jeff Mohr. So thank you guys out there. If you have any questions, feel free to reach out to us, and have a great day.
Thank you.
Thanks again, guys. Hope you have a great day. Can't thank you enough. We truly appreciate it. Jess, thank you again. Have a great day out there, guys. If you have any questions, feel free to email me out here as well. If you have any questions for Jeff, we'll make sure he gets those as well. But thank you again. We truly appreciate all your time. Hope you guys have a great rest of the day. Bye now.
Thank you.